Good morning and welcome to the webinar, Unemployment Insurance Facts Every Employer Should Know. I'm Sean Lyons, Executive Director of the South Dakota Retailers Association. Today's program will feature presentations by Don Williams and Scott Jeffrey of the South Dakota Department of Labor and Regulation. Scott is a tax manager for the Unemployment Insurance Division. He's been employed with the Department of Labor and Regulation for nearly 28 years. He was appointed tax manager in July of 2013. Previously, Scott was a tax program representative with the department. He supervises 16 with the tax unit who are responsible for employer compliance under the South Dakota law, the collection of quarterly wage reports and taxes, and performing payroll audits on businesses. Scott's emphasis of expertise includes employer compliance under the Unemployment Insurance Tax Program, independent contractor employee issues, unemployment insurance statutes, and employer outreach. He is located in the Aberdeen Administrative Office. Dawn serves as the Unemployment Insurance Labor Program Administrator for the Department of Labor and Regulation. She has been with the state of South Dakota since August of 2010. Prior to joining the state, Don was employed with both Coventry Healthcare and Mutual of Omaha as a service operations supervisor. Don has a Bachelor of Science degree in Business Management from Montana State University. A few notes before we start. The phones of all the attendees are muted so that we won't be hearing background noises. Second, we will have a question and answer period at the conclusion of the presentation. If you'd like to ask a question at any time, just go to the panel on the right side of your screen. You may need to click on the orange arrow to maximize the panel. Where it says type message here, type in your question, then click on submit. At the conclusion of the presentation, I'll read the questions out loud and one of our presenters will provide the answers. Finally, there is an Unemployment Insurance Handbook for Employers tab that's located on the right side of your screen. If you'd like to open that tab, you can also follow along as a handout for employers to have, as well as after this presentation. We'll now turn the presentation over to Don and Scott. Good morning.
Good morning, Sean. Thank you for the nice introduction. And good morning to everyone else. Today we're going to basically cover three topics for unemployment insurance purposes. The first thing we're going to cover is employer taxes, We're going to discuss briefly new hire reporting, and we'll also have Dawn visit with you about worker benefits. If you have any questions about the screens or anything that we're talking about, it might help that if you write the screen number down with your question, we can always go back to that screen too after we're done. All unemployment insurance benefits are paid by employers or funded by employers. In other words, through your unemployment tax that you pay on your quarterly wage reports, that tax is deposited in the state trust fund, and that's what funds unemployment insurance benefits to workers who are laid off. You pay tax in South Dakota. You pay tax on the first $15,000 that each employee earns for the year. This amount has increased ever since the year 2007 through 2010. It went up $500 a year, and then from 2010 through 2015 it went up $1,000 a year, and this is where it's going to cap out at $15,000. Our neighboring states have substantially higher base wages. For example, Minnesota, the base wage there is $30,000 a year. North Dakota, the base wage is $35,600 a year. Montana is $29,500. Wyoming, $24,700, and Iowa, $27,300. So they're all substantially higher. Nebraska has a lower base wage limit. Theirs is at $9,000. But all states collect what they need to fund their programs. They do have a higher tax rate than the state of South Dakota does, and That's how they've kept their base wage substantially lower. For you as an employer, there's 3 taxes that you actually pay that are associated with unemployment insurance. First of all, you file a Federal Form 940 annually. Most of you file it annually. If you're a larger business, you may have to make quarterly deposits. But that's at 0.6%. That's what you're going to pay as long as you are timely filing both to the IRS and to the state of South Dakota. If you're not timely, then that amount goes up substantially. I think it's 6.6%. Now, you're also, of course, going to pay the state unemployment tax based on that taxable wage and your rate. That goes into the trust fund. And one other tax that you see on your unemployment insurance reports is the state investment fee tax, or the IF tax you'll see on the report. That is not something that's deposited in the state trust fund. Instead, we are assigned to collect that and transfer that money to the Governor's Office of Economic Development. I will say that amount of money that goes there, even though we've seen an increase in our base wage every year, the Office of Economic Development has actually lowered the rates to offset the increase in the base wage. So that amount is not really going up at all. It's kind of staying where it's been for quite a number of years. The next slide I'm showing you is a slide that will discuss how employers meet liability. Not every business is going to pay unemployment tax. You have to meet the liability requirement first. I will say, however, if you do have any substantial employment, you're more than likely going to be required to pay the unemployment tax. What I consider a standard employer, that's your everyday Main Street business, so to speak, nothing associated as agricultural on a farm or domestic. The way that you can meet liability is by paying $1,500 or more in total wages in a calendar quarter. Now, once you're subject during a quarter, once you meet liability for one quarter, then you're subject for the year. So if you had a quarter in which you didn't pay out $1,500 previously during that year, you'll have to pay the tax on those wages once you meet the liability qualification. If you don't pay out $1,500, then we look at how many weeks you've had employment in. So this will cover full or part-time employment. There's no differential or discrimination between that type of employment, so to speak. If you have employment in 20 different weeks during a calendar year, then you'll be subject to the unemployment laws. Otherwise, if you purchase a business that is already covered under the unemployment program, you're automatically subject to the unemployment laws. So there are some options there that I'll talk about in just a little bit as to acquiring a business and what your options are as far as tax rates. We'll continue here by talking about agricultural workers, and agricultural was defined as work done on a farm. There are other agricultural-related industries. They're not always covered for the liability for agricultural because not all that work is done on a farm, so they would be treated as a standard employer. However, if you are an employer that you are employing people for work on a farm, we look at if you paid out $20,000 or more in total wages during a calendar quarter. Otherwise, we measure if you have 10 or more individuals working sometime during a week and have 20 of those weeks during a calendar year, which would make you subject to the unemployment laws. If you are a domestic employer, in other words, you are having someone work in your home, whether that may be for home health, nannies, a cleaner, a house cleaner that you have come in. It wouldn't cover a house cleaner that has their own business like Mary Maids or something like that. But if you just had somebody that you picked up to come in and clean your home, that would fall under domestic employment, and there that has to be $1,000 or more in total wages in a calendar quarter. What's different about the dollar amounts for agricultural and domestic is this has to be cash wages only. Payment in kind is not considered a measurement for wages for agricultural and domestic. Whereas with standard employment, you're going to have to report any type of payment in kind or meals not for the convenience of the employer, bonuses, things of that nature. We always get the question about what about a business that comes into South Dakota from out of state? Basically, if that employer is already subject to another state's unemployment tax laws or also subject to the federal unemployment tax law, that employer is immediately subject to the unemployment laws in the state of South Dakota. They do not have to meet the $1,500 criteria there because they've already met that in another state, so they're going to be subject to the laws immediately here in South Dakota. If you are looking at selling your business and you have somebody that has agreed to purchase it, we ask that you let us know, inform us within 30 days from the effective date of the sale. This could also cover if you've changed the ownership structure of your business. What we do is we would process a change of ownership on your unemployment tax account. As a new owner of a business, you have an option of acquiring the unemployment account that was already established by the previous owner. That can have some advantages for you in the sense that you would acquire that rate from the previous employer, and if that rate is lower than what the new employer rate is, you would gain that advantage immediately. Plus, you would have the wages built up in an account balance to cover any future unemployment claims. Questions we always receive is how do employers report wages? I would say a little over 60% of our employers right now report electronically in one means or another. Probably the most used electronic filing is our online quarterly contribution, investment fee, and wage report. You can submit your report online and also pay your tax online. Employers also, we have quite a few of them that contract with payroll services to do their quarterly reports, or the other options, you can still prepare the reports by paper and submit those in the mail. The online system is quite convenient. It's always open with the exception of just a couple of days out of the year when we are closing business for the year, and then we have to transfer information from mainframe into our servers. But that's usually less than a week's time. But it allows you to pay your taxes electronically through EFT. The online system calculates all your total wages and your excess and taxable wages. It computes the taxes due. You can update your account information, including mailing and email addresses, phone numbers. One of the nice things is if you use a payroll program that creates a file for you, you can upload that file directly into our online report and not have to do any data entry. I filed a quarterly report for a couple of clients that I work with that have well over 1,000 employees, and that usually takes all of about 10 minutes to get everything accomplished. So it's pretty sweet and convenient. Plus, you can go in and view any previous reports since we started the system, which was in 2009. We'll have that data and information out there for you. This is kind of important as to what types of payments are reportable, because we get a lot of questions every day, and we welcome those questions, and it's important to know what you're offering your employees, what you're paying them, and what's reportable. Basically, you're required to report the gross wage that employees earn. It's not an adjusted gross, it's the actual gross. That can include commissions, special payments like bonuses. We look at cash value, which could mean lodging and meals, rent. If you're a restaurant, you must report tips and gratuities. There is a little bit of exemption there if you earn less than, if your employer earns less than $20 a month in tips, then you don't have to report that. But if the employees earn more than $20, then you have to report it all. You have to report employee contributions to certain retirement plans. The employer's contributions are not reportable to most retirement plans, but the employee portion that is deducted out of the employee's gross pay, that's what you'd have to include. Types of payments, common payments that are not considered wages are employer-paid premiums for life and health insurance and payments made under a workers' compensation plan. So if you have an individual who's receiving workers' comp payments, that's not a taxable wage item for unemployment insurance purposes. I will say the employer-paid premiums, if you offer the employee cash to pay for the insurance premiums and instead of you directly paying for the premium, you're going to have to report that as a wage item unless this is an accountable plan. In other words, you can prove that the amount that you're giving to the employee directly covers the cost of that insurance, and that's what's considered an accountable plan. Termination, or more commonly known as severance pay, unless you are legally required to pay that, in other words, there's an agreement up front between you and the employee that you will cover or pay severance pay, that is not reportable. It has to be, you have to be legally required to pay it in order to be subject to the unemployment tax laws. The next bullet point is the actual employer contributions or the retirement plans that are exempt. South Dakota has basically mirrored the IRS with the exemption for the retirement plans. So if your payment is exempt for federal purposes, it's always also exempt for state purposes on retirement plans. Payments to elected officials, that is not considered covered employment. Either is work study. If you have an individual that is going to college and receiving credit and you're offering them an internship or employment to basically complete that education credit, that's not going to be reportable. That would be considered similar to work study. It's an internship, but sometimes internships or work is called internships, but it isn't offered for credit through a university, so you need to be careful there. If you're doing that, it has to be an accredited class through a university to be exempt payments. With owners of a business, not all owners are subject to unemployment tax. For example, if you are a sole proprietor of a business, it's a individual owner, your wages as the owner are not subject to the unemployment laws. Your spouse is also not covered under the unemployment program, and neither are your minor children under the age of 21. In addition, the parents of the owner are not going to be covered under the unemployment program. So the employment of your close relatives are going to be exempt. Once your children turn 21, then the wages you pay after they turn 21 are going to be subject to the unemployment tax. In a partnership, the only individuals not covered under the unemployment program are the partners. Whether it's 2, 4, 6, the partners are not going to be subject to the unemployment laws. Everyone else will be. We do treat husband and wife partnerships similar to a sole proprietorship in the sense that we do allow the minor children under the age of 21 to be exempt from unemployment purposes. Now, what changes is in a corporation. In a corporation, it is considered an entity of its own, and all individuals who perform a service, including family members, corporate officers, shareholders, if they're performing a service, they're going to be required to have their wages reported for unemployment tax purposes. If you have a shareholder that's only receiving a return on investment, that's not employment. They have to perform a service for the corporation. Limited liabilities, they're treated as a disregarded entity. And what that means is, as a limited liability, if you're a sole member LLC, you're basically default to being treated as a individual ownership or a sole proprietorship. If you are a multi-member LLC, you're defaulted treated as a partnership, and those are the laws by the IRS. However, you can file with the IRS a request to be treated as a corporation. If you do that, then we treat the member of the LLC the same as a corporate officer. That if you're going to be treated as a corporation for federal income tax purposes, then the members will be treated as a corporate officer and their wages must be reported for unemployment insurance tax purposes. The next subject I'm moving on to is independent contractors versus an employee, which I must say takes up a large amount of my time. It's not uncommon for somebody who's employing somebody to try not to pay unemployment tax, or I need to expand that to say not to pay employment taxes. Employment taxes, they probably make up anywhere from between 30 and 40% of your total cost when you look at all the expense involved in having employees. It's not a cheap endeavor. The problem is there's way too much misclassification of workers, and the federal government, all the way to Congress, has passed substantial statutes that are requiring states to spend a substantial amount of time investigating whether employees are being classified correctly. So basically what we tell you is, if you are employing individuals, lots of time it's called casual or temporary or part-time labor, don't assume that those individuals are actually in business or independent contractors, let me put it that way. In South Dakota law, there are two things that must be met in order for an individual to be considered an independent contractor. The first thing is the individual has to be free from control or direction in the employment and how the work is being done. It doesn't necessarily mean you're giving the individual freedom on how to carry out his duties. You may say, you pick the hours this week you want to come in. It's not necessary for you to be here all the time. But if you have the right to direct the work, you give the work out, you're assigning work, you're lining up work, you have the legal right to control that work, then you actually have control and direction. But in South Dakota, the second item that needs to be met, and this really catches so many of the situations, is the worker has to be customarily engaged in their own independently established business. And appeals courts have really defined independently established business as a business that is ongoing and survives separately from the relationship between the worker and the, for lack of a better term, employer that person's working for. If the relationship severs today, can that worker actually continue to operate without interruption doing the exact same thing tomorrow? And also, does that person actually have an established business prior to the relationship existing where they have offered their services to the general public the same way that they have offered them to you? That's kind of the way we look at it. We're well aware that the IRS has, or I should say they've had a 20-question criteria that they looked at. They've kind of reduced that down to three different types of characteristics, but the 20 questions are still part of those three characteristics. So unfortunately, the state has its own statute, so regardless of how you interpret the IRS laws, you may want to be certain that you've contacted the state if you want to be sure that you're classifying the individual correctly, and we'll certainly help you with that and give you the right information there. Unemployment tax rates, they're set as a new rate for all beginning employers. If you're a new business in the state of South Dakota and you're in a non-construction industry, you're going to have a first-year rate of 1.2%, and that's for your unemployment contribution. And you'll have an investment fee tax of 0.55%, 0.55%. So your total rate is going to be 1.75% of the first $15,000. If you are a construction-based business, your first year rate is going to be 6.55% total rate. The investment fee remains the same at 5,500, but the starting unemployment tax rate is 6%. The reason that's substantially higher is generally businesses that operate in industries related to construction have more unemployment claims, and they're more seasonal, so they build up their account balance a little bit quicker than the non-construction businesses. However, if there's no claims, their rates are going to go down substantially. And employers' rates for the second and third years of reporting will decrease as long as the employer has a positive account balance. And that's important to know. If you have claims immediately after you've employed individuals and your account balance stays negative, you're going to stay at the new employer rate during the first 3 years. After 3 years, we tell you that you have to have 3 years of experience before you're considered rateable. So after 3 years, we do rate your business based on your prior experience during that period of time. We look at the amount of taxable payroll you've paid the last 3 years. We divide that into your current account balance, and the account balance basically is the amount of contributions you have paid in during that time, less the amount of benefits paid out, and less a pool charge. And that basically calculates to a reserve ratio, and the reserve ratio then is compared to the rate table in order to determine what the rates are. In South Dakota, right now, the rates range, the unemployment insurance rates range from 0% to 9.5%. The majority of our employers are between 0 and 1% once they're rateable. However, if you have the negative account balance, those types of balances, they're going to be where you see the rates between 1% and also 9.5%. So again, the first bullet just describes that you're rateable your during your 4th year, and all employers receive a rate notice, and now we send them out in November. We used to send them out in March, and it was hard for many businesses to estimate what their cost was going to be, so we had a statute change, and I think it was a very, very good change where now we send out rate notices prior to the beginning of the year. It does help and assist you in estimating your cost for the year. When we do calculate your rates, you'll notice we take your account balance, and we're always using the current account balance as of the rating time, and we divide that by your taxable payroll. And that's what we get, the reserve ratio. I don't have a rate notice built in here, but we can always provide that. In fact, you're going to be getting them within the next month and a half here this year as well. Here's a breakdown of what your actual cost is if you are a non-construction employer. Your state unemployment is first, 1.75% times $15,000. So if you have an individual that earns $15,000 or more, your tax is going to cost $262.50 for that individual that year. For federal unemployment, as long as you're filing timely, the base wage for federal unemployment is $7,000, and you'll be paying tax at a rate of 0.6% or $42. So for unemployment purposes, your total cost for a year as a new employer is $304.50. That will reduce down to a second and third year rate as long as you have a positive account balance, and the investment fee doesn't get reduced. However, the unemployment tax, the contribution rate does. That drops from 1.2 to 1%. and there you can see your minimum fees. So if you were if you didn't have any claims against your account and you had enough in your account balance to offset your taxable payroll, you could easily attain a rate of 0%. On the other hand, if you have a substantial negative account balance, you could be paying up to 10.03% when you include the investment fee. These are the local itinerant offices we have throughout the state. The central office for unemployment insurance tax is located in Aberdeen. That's where you'll find myself. You can contact me there. We do have tax department representatives currently located in Brookings, Huron, Rapid City, Sioux Falls, Watertown, and Pierre. That's what I have for unemployment insurance tax for the time being. Now, if you have questions, I'll be glad to answer those afterwards. But what I'm going to do right now is I'm going to move right into new hire reporting. New hire reporting was initiated by the Personal Responsibility and Work Opportunity Act of 1996. It's one of the very few programs that has consistency or continuity throughout the entire United States. And basically it's really been established to locate non-custodial parents who owe child support payments. New hire information, the primary use is by the Department of Social Services, the Office of Child Support Enforcement. It's also used by TANF, Temporary Assistance for Needy Families, Medicaid, Supplemental Nutrition Assistance Programs, all pretty much social programs. So the Department of Labor and Regulation also uses the information. We use it through the unemployment insurance program to determine if somebody has gone back to work but is still fraudulently then receiving unemployment benefits. That would hold true also for workers' compensation. And what the Department of Education uses the information for is for defaulted student loans. So if you haven't paid your student loan and the employer you're working for has reported your wages to the National Director of New Hire, they'll find you and probably have a garnishment order to receive the repayment of those loans. All employers, whether they're private or public, nonprofit or governmental, must report newly hired employees. You have to report those individuals within 20 days from the date that you hire that worker. We tried to make it as convenient as possible to report that information. You can mail or fax a W-4 form to us. We do have some pre-printed forms. You'll find it online. And you can mail or fax those pre-printed lists to us. You can call the information in if you prefer to do that. You can also report online through our website at sdjobs.org. If you are a larger employer or you have employees specifically in more than one state, you're going to be required to report electronically or magnetically. You'll have to do that, and you'll probably have to do that on a bi-weekly basis. And if I'm talking to you today and you already have employees, you probably know if you're required to do that already. So the information required in South Dakota is the name and address of the employee, including their Social Security number and their start date, the first day that they perform services for you. Not necessarily the day that you offered them the position, but it's the day that they first started working for you. And then your information we need is your name, business name, and address, and your federal identification number. Those are the required information. This again is MultiState Employers. You don't have to do this unless you employ individuals in more than one state, but you'll have to report those employees to the one state and notify the Department of Health and Human Services in writing of what your intentions are and which state you're going to report those individuals to. Dawn, I will turn this over to you now, and you can go over worker benefits.
Okay, thanks, Scott. So I will go ahead and go over the worker benefits, the employee, basically the information when the employee or the previous employee files a claim. When an individual goes to file a claim, they can do that either online on the internet or by telephone. We have a call center where they will call in during the week and file a claim by the call center. And then also they can go onto our website. In order to receive unemployment insurance benefits, first we have to determine if the claimant is, or the individual is monetarily eligible. So the claimant must have sufficient covered earnings in the base period, which is the first 4 of the last 5 completed quarters. An individual without sufficient covered earnings, they may qualify with an alternative base period using the last 4 completed quarters. So this slide here shows the normal base period. So if I was an individual that is going to file a claim, say in June of 2015, the first 4 of the last 5 completed quarters would be all 4 quarters of 2014. So the wages that I earned during that period would be used to determine my eligibility or not. If an individual does not have enough money in the first 4 quarters, then we look to see if they're eligible for an alternative base period claim, which that uses the most current completed quarters, and we'll use that to determine if they're eligible. We do everything we can to try to see if they're monetarily eligible or not. Sometimes if an individual files in June or one of the quarters, we'll tell them, try back the start of the next quarter. So I may not be eligible now, so they may tell me to go ahead and contact us October, and we'll see if we can make you monetarily eligible at that time. In South Dakota, the benefit amounts that we currently have a weekly benefit amount. Our minimum is $28, and our maximum weekly benefit is $366. That normally increases July of every year, just depending on what the average wage salary is in our state. The total benefits paid during the benefit year, it's 1/3 of their total base period earnings, up to 26 times their weekly benefit amount. And they do have a maximum of 26 weeks, which is a maximum dollar benefit amount of $9,516. Now, an individual may draw more than 26 weeks because we do have some that do go part-time. So they may just be earning, they'll work part-time and they'll report their earnings, and so they'll receive a decreased benefit amount, so that can extend the period of time that they're drawing benefits. Once a claim is filed, the individual will report their work separation with us. And that separation, once we've determined them to be monetarily eligible, we need to review that separation to determine their eligibility for benefits. Now, if an individual tells us that they voluntarily quit employment, then that is up to the individual to establish it was good cause for quitting that employment. If it is a discharge, then that's up to the employer to establish the work-connected misconduct. So that's where we really rely on the employer information. If somebody discharges an individual, information provided us by the employer is very, very important. Once a claim is filed, you'll receive a notice of claim. With that, it's very important the employer should provide specific details as to why the claimant separated and attach any written documentation available. So if you've counseled this individual, it's so important that you document the date you counseled them, advise that if this behavior continues, there will be consequences up to termination. Document that information and be able to provide us those details once the claim is filed and we're gathering information. Also, it's important to report any income that the claimant's been paid or will be paid as a result of the separation, and this includes their holiday, vacation, severance pay, or wages in lieu of notice. The period of time that that individual receives, say, holiday or vacation pay, we would make that person, they would be eligible for a benefit if it's a layoff, but that the money they received then would be ineligible during that period of time that that money represents. Charges to employer accounts. Now, employer accounts are charged whenever benefits are paid unless the person voluntarily quit without good cause. So if they just tell you that they're stop coming to work and don't notify you, and we've determined that they voluntarily quit your employment, then obviously you would not be subject to charge on that. If the individual is discharged for work-connected misconduct, your account would not be charged. and also if there's an inability to complete a 90-day probationary period. Now the important part of that is that needs to be established at the time of hire, meaning that individual needs to be aware that they are hired on a probationary period. So that's very helpful also if you can submit maybe a signed piece of paper that you're hiring them on it, contingent on this 90-day probationary period. Sometimes you have a lot of information going to the individual when they first get started, and we ask them, were you on a 90-day probationary period? And they'll tell us, no, that was never brought up to me. So if you can have some type of documentation that shows, yes, we did hire them and it was on a 90-day probationary period. And then also if an individual earned less than base period wages of less than $100, your account would not be charged for that. If you're a reimbursable employer, those exemptions do not apply and your account would be subject to charge. An employer's account cannot be relieved of charges if an erroneous payment has been made because the employer was at fault for failing to respond timely or adequately to the department's request for information. Now this situation will happen, maybe we'll send out the notice of claim and the employer has never responded, and we also try to reach out. We are required to make 2 attempts to contact an employer. So the notice of claim has not come back, we also try to make a call to the employer, leave a message. That employer doesn't respond to us, so then all we can do is go off of what the individual is telling us, so we will allow benefits. Now eventually maybe something happens, the employer notices that they never did respond to this and they want to send in the information, and that information is disqualifying information, so then we would go back, conduct an investigation, contact the individual, and then potentially disqualify them. Any payments that were paid to that individual during that period of time would be considered erroneous, and the employer's account would not be relieved of those charges during that period of time that they were paying them benefits up until the time that we received the information that disqualified them. Claimant responsibilities. Once an individual is determined to be eligible for benefits, each year they are required their first eligible week for payments is described as our waiting week. That is a non-paid waiting week. So every year when they file a new claim, if an individual, for example, is laid off, that first week of their new claim is non-paid waiting week. They still need to meet all of the eligibility requirements, file their weekly certification, but they do not receive any benefit for that week. An individual also needs to be able and available for work, meaning if work was offered to them, they need to be available to accept that work. So we will determine sometimes there may be a medical issue or some type of other thing that's restricting their availability to work. We do conduct investigations to determine that. We also the claimant is also required to conduct an active search for work. In South Dakota, that is a minimum of 2 job contacts a week, and they're also required to register with their designated state workforce agency. And we do verify work searches, so I'm sure that some of you probably already had somebody from our office contacting you and asking for information, trying to verify whether or not an individual did apply for employment at your place of business. So it is helpful if you if you keep their resumes or their applications on file, kind of log a name, so that when we contact you, and the date is very important also because that when they're claiming their week, they need to make those contacts during that week. So it is very important that we have that information from the claimant and if we can verify it with the employer. Also with South Dakota, the number of weeks that an individual claims, once they reach to week 12, their requirements for job contacts increases. We have what we call the Reemployment Intensive Services Program. So in South Dakota, we obviously all know there's a lot of jobs to be available and out there. So we're trying everything we can to get these people back to work. So after week 12, it's kind of why aren't you working? What jobs can we direct you to? So a more intense program begins, and they are directed to apply for jobs, and then the number of contacts increases each week. And then also an individual needs to be willing to accept suitable work if offered. So if an employer offers an individual work that they've applied for and the individual turns that down, We do get quite a few times individual does self-report, but also we do appreciate anytime an employer will let us know, just so you know, we had this person came into our office, we offered them employment, but they refused it. We will determine or conduct an investigation on that and use that to determine if maybe they potentially could be disqualified for refusing work that they had applied for and that they were suitable in doing. So again, an individual needs to, each week, they're required to file weekly certification. So that weekly certification that they file each week is based on their previous week and what jobs they've had applied for. If they worked part-time, they need to report any of those earnings that they had, their work and their earnings. Their weekly certifications, those can be done by telephone or online 24 hours a day. And again, a claimant must be physically able to work in their usual occupation or other work for which the claimant is reasonably fitted. So, for example, maybe an individual broke their leg, they cannot do production type work where they stand up, but they have previous call center or desk type experience. So we would determine, even though their leg is broken, they can't do what they had previously done, but they are able to sit behind a desk and answer phone calls or do that type of work. So we will look at each situation, you know, ask the individual, what type of work are you capable of doing? Have you had experience with that? So we do conduct quite an investigation when the individual is on the phone trying to determine whether or not they are able and available for work. And again, they must be available for work the majority of the week. So sometimes you have somebody that says, you know what, I just, for 3 days, I was really sick, I had the flu, but that is not considered the majority of the week, so we would allow them benefits for that week if that's what is reported to us. With the offer of refusal of suitable work, there are certain factors that we investigate and look at to determine whether or not it was truly suitable work. First of all, we'll look to see the risk involved, the prior earnings. So I have somebody that is just starting to file unemployment. We're earning $20 an hour in their second week of drawing benefits. They get offered a job that's $10 an hour. At that point, we probably would look at it and say, you know what, give them the opportunity to get to where they were before, and we would not consider that an issue at that time. Also, distance from residence. We won't expect a person to travel more than any that they had before. Sometimes we usually set that at a 50 mile hour or 50 mile radius. Also, we'll look at their prior experience and training, and then we do consider the local job market. We do look into our labor market information center. We get a lot of statistics from that and are able to look at that job market to see how many jobs are open in that field and what is their opportunity for employment in that area. And then also, again, we'll determine the length of unemployment. If they've been filing for 18 weeks and now the wage is down lower than what they earned, then certainly we would look at that and say, you know what, you really at this point should be taking some type of work. Anytime a decision is issued, the appeal process is open to both the claimant if they are not satisfied with the determination that we've come up with, and also the same as for the employer. So both parties are given opportunity to appeal the decision that was issued to them. Now, in a situation with a misconduct, this is very, very important. So we've worked with the employer. We've determined that it is misconduct. The person is disqualified. They file an appeal, and the employer feels that they provided us every information that they needed, and so they don't feel that they need to show up for an appeal. That is, we need you to be there at the appeal, because the employer, the appeal process kind of starts all over at that point when the claimant calls in and the employer calls in. They both need to be able to provide that same information, and sometimes even more information is available at that time that they can give to the administrative law judge. But if the employer does not call in, any of that information that was provided to us is not admissible, because the employer needs to be able to be there to represent. So once an appeal decision has gone out and you've gone through that process, and you still do not agree with the administrative law judge decision, you still have the opportunity to file an appeal with the Office of Administrative Hearings, also with our Secretary of Labor and Regulation, and you can also choose to either go to Circuit Court or Supreme Court. That information is all on a, once a determination is out, all the information on an appeal is provided on that determination. This last slide here is information of all of our contact information. So we have our director, Pauline Heyer, and deputy director, and Scott and myself, and then Becky Burdick, who is also with our new hire reporting program. Those names were all here in that Aberdeen office, and then we also have James Marsh, and he's in Pierre, and he is considered the labor and management director. And also our next slide is just our the www.sdjobs.org. That is our homepage. There is so much information out there that we really would encourage you to go out there and visit that site. Look at the labor market information. There's a lot of statistics, a lot of information as to, you know, what are average wage for somebody doing a certain job in Sioux Falls compared to an individual in Rapid City. So there's a lot of information. There's a lot of your unemployment, the actual number, unemployment percentage by county, by state. So we would encourage you to get familiar with that, and also it's for the employers as far as going out and reporting your wages and any of that information. That's your link to get there. So that is all the information that Scott and I have, so we would welcome any of your questions at this time.
Well, thank you both. It was a fantastic presentation, a lot of information, and once again we'll have the information up on our website. But let's go ahead and get to some of those questions. And before I do that, I should mention as well, we have the opportunity, Governor Dugard appointed me to serve on the Unemployment Insurance Advisory Council, which just met last week, and that group meets periodically to review unemployment insurance law in the state as well as possible changes. So our members have a voice at the table with regard to that subject. Let's start with the first question then. And it says, I would like to know if I fire an employee, are they automatically eligible for employee benefits? I heard that if an employee shows up late every day and I fire them, they might be eligible for unemployment benefits. Is that true?
With that, again, that's where the documentation is important. Now, if this employee has shown up every day and you've never addressed that situation with him and you've never given them the opportunity to improve, then potentially that could be something that they may potentially be eligible for, because again, you've got to point out to that person that your behavior is not acceptable to me, and I'm going to give you, the next time you do that, there will be termination. But if you've allowed it and you just decide that one day, I've had enough of it, you're done, that employee may not have known that they know that their time is at 8 o'clock, they're supposed to be to work, but their employers never really pointed it out to them that that behavior is not acceptable and I will not accept it anymore.
When I talk to the employer, one of the things I will tell you is it would be very, very good and in your best interest to have some type of manual. The manual could be as short as 1 page long, but it could be a little bit longer than that, whatever you want. But basically outline your expectations of your employees. And one thing that will help the benefits section is have them sign an acknowledgement that they received your expectations, and that way if there are any questions later on, the employee can't say, you know, no, I didn't know about this because you didn't talk to me about this before. I had never heard of this stuff. But you've got some documentation now in place to prove that you did.
And we had a follow-up question from the same individual, and you folks both addressed this, but I'll just go ahead and read it so it's on matter of record, and if you want to add anything further, go ahead. If I fire someone, what kind of documentation do I need to keep to show that I had good cause to terminate them? And will the documentation make a difference in determining whether they're eligible for benefits?
Definitely documentation will make a difference. Document the date, document what your conversation was. I spoke to John and I told him, you showed up 15 minutes late 2 days in a row. I'm not going to accept it anymore. If you do it again, you're going to be terminated. So you laid out the groundwork right there. And we do get a lot of employers that have an individual sign what they had. And so then that way that can be submitted to us. And even if the individual refuses to sign, you write on that documentation, refuse to sign. And then that copy of that information can be provided to us also.
Next question. Don, you said employers' accounts are not charged if an employee is fired for, quote, worker-connected misconduct. How do you define work-connected misconduct?
Again, that is worker conduct. I'm going to try and get to the law. That's anything that is going to affect the employer in a negative way. It could be, we even have situations where they've gone out and been negative towards their employer on Facebook, and that has been brought to the employer's attention and the claimant's attention, and they've gone out and kind of slandered the employer. I'm going to go to the misconduct law. It is a difficult thing to define. Obviously, if you've got arguing in the workplace, damaging property in the workplace,
stealing money out of the till, or
correct. If you've got, there's some situations where you've got the individual and you've hired him, and maybe they're just not capable of doing the job, and they're trying to do the job, but they can't do it. They're not capable of doing it. Okay, so obviously you're going to probably let them go, separate, part ways. You've got this individual that they're capable of doing the job, they've done it forever, and all of a sudden they've got an attitude towards you. They may be coming in and saying negative things and being disruptive to their coworkers. Then potentially that could be determined a misconduct. So it's anything that really has of course, theft, coming in, if you violated the drug policy. But again, like if you have a drug policy, you need to make sure that was a drug test taken? Did you administer any type of drug test? Was there, signed documentation that they knew what those consequences were if they violated any of these policies that you had? As Scott said, any type of manual or documentation that shows that they were aware of that their behavior was not acceptable, and then again, because it could have harm to the employer, other employees, those could be determined as misconduct.
Don mentioned that an employer's account may not be charged for benefits if an employee is discharged for inability to complete a 90-day probationary period. Is that 90 calendar days or 90 work days?
90 calendar days.
And on that 90, I'm sorry, go ahead, Don.
Some employers may even have a 30-day probationary period or a 60-day probationary period. So that's still anything 90-day or less. Now sometimes we have employers that do the 120-day probation, and so then at that point you've exceeded what the law states. The law states a 90-day, and it is calendar days.
On the 90-day probationary period, does an employer need to have the employee sign something at the time of hire that shows they understand they have a 90-day probationary period?
It's helpful if it is signed, but if you do have, an employee manual, which usually, if you have an employee manual, they usually are required to sign something in that manual that they've read the manual. It's just very important that there is an agreement that the individual knows that they're being hired on a probationary period. And if you yourself, like I said, sometimes you get, there's so many things going on that first couple of days when you're bringing in a new person, and you're probably giving them other types of documents to read. They may have missed the part that they are on a 90-day probationary period. If you can send us a document that says, here's our training manual, right here it says they're on the 90-day probationary period, sometimes we'll go back to the claimant and we'll say, hey, it says right here in the manual that you were hired on a 90-day probationary period. Were you aware of that? Well, they may have said that to me. I must have just missed it. So if there's something in writing, it's very helpful.
Again, that's where documentation always is a benefit.
Does the state check to make sure a person who is receiving UI benefits is actually applying for the jobs they say they're applying for? That was the question received, and I will tell you that we get that same type of question from time to time from various businesses around the state. So your response?
Yes, we do. We obviously, as I said, with the Reemployment Intensive Services Program, that requires an individual to come in each week and visit one-on-one with the local office representative. And sometimes that representative will look at their job contacts and what they have written down and have reason to be concerned about it. So they'll contact us, hey, would you please review some of these work searches that this individual has been doing? So we can get tipped maybe by a local office. We have audits. Everybody is subject to a random audit. We will even have a situation where we're working with a claimant and we see they're a customer service representative in Sioux Falls and they're filing benefits for 14 weeks and we're going, we might have an issue here because obviously Sioux Falls is big, we know there's a lot of opportunity, so we ourselves will initiate, we have a benefits payment control unit, we'll initiate, send it up to them, hey, can you have one of your investigators go out and check these work search because we have a feeling that this person should be employed by now. So we do, South Dakota is very good about that and that we do as much as possible try to verify work search. So that's where it's important that if an employer can provide us as much information, then obviously if they fail to make the work search that they told us to do, then we would, and they've received benefits, then we would create an overpayment and hold them ineligible for that week that they told us they contacted an employer that they did not.
We have one more question, and before I get to that, if our attendees have any further questions, please submit those now. Otherwise, you're welcome to contact Don or Scott at the contact information on your screen. I'll read the last question. Why do some employees have to do job contacts and some don't?
With that is, we have an administrative rule that exempts certain employees from having to make job contacts. We have 3 different classifications when an individual files. So, for example, it's layoff or construction company in November, and all of their base period wages are with that same employer. And the employer is able to provide us a recall date. So it's very important that we have a recall date where the employer says, yes, I laid him off and I plan on bringing him back in April. So because all of his base period wages were with this employer and because this job that he's being laid off from is there is lack of employment due to weather-related conditions. So for example, in South Dakota, obviously we know our construction is weather-related and it's you're going to work if it's nice, and once we get cold, that job is affected by the weather. So that individual would be exempted from making work search until it's time to go back to work. Then we also have some that they do not have their full base period with that employer, but their employer is intending to call them back within 10 weeks and their job is weather-related. If we have an individual that maybe works inside, they're laid off, and they're a secretary, and we know that there are secretary jobs available, and they're not being called back, they would, within the 10 weeks, then they would not be exempted, and they would have to look for work. So with South Dakota, this rule kind of got changed about 4 years ago. It used to be the weather-related conditions were not included in the rule, and that's when we decided there was a lot of job openings and a lot of people that were not having to look for work. So we added the weather-related. So we look to see what the occupation is, what the opportunities are for that person to be employed with that occupation, and that kind of makes a difference on whether they're going to be exempted for work or not.
Scott, Don, any further comments or things that you'd like to add before we wrap it up?
Well, we appreciate the opportunity to present information whenever we can. We invite questions at any time. One thing we get concerned with on the tax side is, if there's any question of whether you're in compliance or not, the best thing is to ask right away, because if something comes up in the future and you've been employing somebody for a while and you've just kind of shelved the matter and you're not reporting it to us right now, it could cost you substantially more in fees and fines, and we're peanuts compared to the IRS. So we would like to watch out for you and be proactive and inform you whether this type of work is covered or not.
And with Scott, anytime you have questions, we would welcome it. Also, out on our web page, there is a contact us where you can go out and just hit contact us, and we would get an email. And depending on what the situation is, we would direct it to whoever the subject matter is that would be able to answer that email. So, for example, we got a great new hire question yesterday that we've not seen before, and we're able to get back to that employer. And I just before I came up had an employer wanting to know about reporting individuals that they were calling in for job interviews, and these individuals were not responding to them. What do they need to do? I want you to call us and let us know.
Yeah.
So anything like that, like I said, that link has a contact us where you can email us, or please feel free to give us a call, because I think if you're questioning the situation, somebody else is, and maybe that's an opportunity for us to learn that maybe we need to get this out there to more employers so they're aware of it. And we'd rather have you be informed, and just please give us a call if you have any questions.
And we're fortunate enough that even though Don and I may not be available every single day when you call in, we do have staff that can answer questions, and if they can't get you the appropriate answer, we'll find out what that answer needs to be, and we'll get back to you.
Well, we appreciate that, and we here at the association have always had a good working relationship, whether it be Director Hire currently, or Don in the past, and of course Secretary Holtman. So we appreciate your willingness to work with our members and us as well as to try to get information out. I want to thank once again Don and Scott, and if our attendees have any additional questions, you can contact them at the Unemployment Insurance Division of the South Dakota Department of Labor and Regulation. This webinar was recorded and will be available on SDRA's website tomorrow. And just a reminder that we have several other webinars scheduled. For information about these webinars and programs to sign up, visit our website at www.sdra.org. Under the Training tab, click on Webinars and Seminars. And again, our website is sdra.org. Scott, Don, thank you again so very much for your time today. We wish you and everyone else a great day. Thank you.
Thank you.
Goodbye.